There he is. There he is. What's going on, Jack?
How you doing?
Oh, another day in paradise,
Yeah. Cold up here in paradise.
Cold up here in paradise.
Oh man, it snowed. Oh, cold in the cabin too, bro. Yeah, Colorado was wet and cold.
Yeah. It's rainy here today, but it's still I think it was 90 over the weekend, so it's still warm here. Anyway, profits and performance shown today. Not typical. Jack and I make no future earnings claims. You can lose money doing this stuff we do called trading. We're going to show you a system later on today, and some of the trades expressed in that system are for back-tested data. And in April of this year, I revamped the system to get an average, about 79% gain in an 8-day hold time. Can't guarantee specific future results. See the terms and conditions on the Jeffrey Trader homepage, jeffreytrader.com, if you need more information. And let's be real, if you do this thing we call trading, you may lose money. The whole purpose and our work with traders like you, give you an edge in the markets. If you can't handle losing trades, don't trade with real money. Isn't that right, Jack?
That is right.
So don't ever risk more than you can afford to lose. If you need to put food on the table, pay rent, pay medical bills, whatever it might be, don't use that money to trade with. This is not a get rich quick scheme. This is not a get out of financial jam free card. There's no goose that lays golden eggs. You just cash in at the pawn shop. Although we do pretty good, but there's no guarantees.
We do good. And there is no such thing as get rich quick. We don't teach that. We don't believe in that. But the stock market can make you as wealthy as you want to be. And we're both living proof of that.
Oh, yeah. I saw something last night. It said, poor is a mindset and being broke is a condition that you can fix.
Hey, if anybody knows that, it's me. I've been
Yeah.
so broke I couldn't even pay attention at one point in my life.
I told my son, I guess he was in elementary school. I was like, "You're too poor to pay attention." And he started crying. He's like, "I don't want
Yeah.
to be
My
poor."
granddaughter, she says, I'm always going to be broke. Just dramatic. Yeah, you're broke at 11 years old. What are you kidding me? You don't have any debts, though. These kids, man. And, that's just funny. Kids and money, that's a whole topic we could spend hours on, but we'll have to save that for another day. But you should get your kids a stock, even one share, just make them follow it, get them into it. There's a tremendous lack of financial literacy when it comes to the market and money. So teach your kids what you're learning a little bit at a time.
All my kids are adults now, so
How old's your youngest one?
my youngest one turns 20 here in about 3 weeks.
Won't look old enough to have a 20-year.
And the oldest is 27, so
Oh my God. 17?
19, 19.
Yeah. Yeah. Good.
Anyway, and found out that you should believe what people tell you, Not Superman. Anyway,
Kids, I'm going to have another grandson, hopefully at the end of October, maybe early November. I can't wait.
congratulations, man.
This kid is going to be amazing. It's going to be a boy. We know that. No name, no career plan for him yet, but Papa's got a lot in store.
Teach him how to fish, that's all he needs to know, right?
Them how to drive when they're five. They love to drive the truck off road when they're like 5, 6, 7. Man,
Yeah.
put a couple blocks on the throttle, and on the brakes, like on that movie Indiana Jones, where Short Round was driving the truck and he had the blocks on the gas and the brake. They love that, man.
Yeah, absolutely. Yeah, I've got a tractor and a backhoe and all sorts of toys. And
Cool.
my niece and nephew love that stuff. So my
Fun.
brother's kids are young still. So
Awesome.
my kids, they're like, yeah, dad's just got stuff.
Yeah.
Anyway, how do we make money today, Jack? How do we make money today?
We got it. We're doing the same thing we always do, starting off selling naked puts, then selling covered calls and doing credit spreads. They're talking. Well, let's look at this docu what you got on here, and then I'm hearing all kind of negative rumors about Bitcoin taking a dive coming up or in the process of it. So let's touch on that after we do the docu side.
Yeah, I mean, so I've got this one. I got put back over here several months ago at this point, and just been riding this forward. Right now, it's still lower highs. Like no, no cutting this, no cutting the mustard, no lying to you, no faking, no, I'm not gonna overhype it here. This is a downtrend. And if this takes me out this week, I have the 84 strike calls sold, which is $2 in the money at this point. If it takes me out, I'm probably gonna be out. Like I don't like downtrend stuff. This is a downtrend until it gets back above, starts making higher highs. And I may just leave this one since it kind of went from the potential to explode higher to confirming a downtrend.
Now,
So
where did you get put the stock?
we can go look. I've got it all on the record. It's all out in the public.
We're already selling calls against it, right?
Yeah, I've been selling calls for weeks. So I'll have to roll back here in history. And I got put a call option, call option, call option. I've been selling calls for weeks here. July 18th, selling calls. Put option. That's probably where I got put right there. I got put July 3rd, or I sold July 3rd, got put July 11th, looks like. And dun, 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 July 11th right there, $78, 78 strike. I had collected quite a few bucks before I got put those shares.
Yeah. And now on the call side, what strike are you selling on the calls?
I've been all over the place. This week I'm at 84. Let me jump back over to the docu. It's currently at 86. I'm at 84. Got put at 78, which was down here, and been collecting credit ever since, all through here. Been collecting call credit.
Nice.
I collected put credit at 78. And then on earnings, we dropped down. I got put those shares. I've been selling calls ever since. And since it confirmed a downtrend, I might just get out and move on. Go look for something else.
Yeah,
Uh,
you still made money in it. That's the bottom line, right? The best part about trading is taking a profit. So if you move on to something else, you made your money and get into something that's got a little more wiggle, a little more jiggle.
Yeah, so I was kind of wrong, right? Is the point here. I was kind of wrong, but still going to make pretty good profit on this trade, quite honestly. And we can go look at exactly how much money by jumping in here and look at these symbols.
Well,
We can
you were
check
wrong
out,
in expectation, but not wrong in application.
right. I mean, wrong in my thesis that it was going higher immediately, but I'm still up 1,300 bucks, 1,358 in booked profit. Plus, I'll be up another probably two and a half grand when it actually books out the shares because they're
Nice.
above what I paid for them. So it's hard to say I'm doing it wrong. I was just wrong on my assumption that Docu was going to immediately go higher, and I just worked the plan, and making money.
And that's enough to start your chicken coop and everything.
I've actually done 13 trades on Docu at this point. It's the tied for the most traded symbol right now
This
in
year,
this
Doc
account.
has been your most traded.
Yeah, Docu and DJT, Donald Trump Media and Docu are the two most traded tickers that I've done so far in this account.
I'd have to say by far AVGO and NVIDIA for me.
So I kind of like this like breakdown thing that this tool does right here on KInfo. And all this information is public right here if you wanted to go check out my profile and see how I'm doing on this 50K challenge that I'm doing, which is my personal challenge to build this account, into a cash generating machine that generates $50,000 of profit per month. It's going to take me a couple years, maybe 3, 4, 5, possibly 6 years. But I'm on a mission to do this. If you want to follow along, you can just
I,
follow me right there on KInfo.
I do want to follow it along. I love it. I want in on that 50,000 a month.
That's a pretty
Oh,
good goal. I mean, a lot of people can't fathom that, but I'm gonna do it. I'm gonna do it. I'm gonna do it publicly, showing you how to do it. I'm already this year up 25 grand right here.
awesome. Now, to get to that 50 a month, how much capital do you think you would need to put into play?
So I built this giant spreadsheet and broke it down even by week, all the way till I can get to my goal. And right now I'm actually about 5 weeks ahead of plan
That's
on the goal. I'm gonna need right around 1.6 to 1.8 million dollars to start generating the $50,000 a month.
beautiful.
And that, I mean, I'm just gonna build it up until I get there. How much did I start with? That's a loaded question because I've been adding to and taking money out of this account constantly. When I have extra money, I throw it in there. When I'm short a little cash, I take it back out. So I'm actually using this account for me. It's not like I'm doing this trading challenge. I started with X amount of dollars. I'm going to build it to this. It's a personal goal of mine to build this account any way I can. I actually borrowed a little bit of money to start trading some of it. I'm having to pay some of that back. So, don't ever borrow money, but I did. And I'm very, very confident in what I'm doing. And I have other ways to pay that money back if things go absolutely south on me.
Now, would you
So,
ever consider just doing it on margin and borrowing money from the broker?
I might get to that point. I have to prove it to myself first, of course. I started very small. Before I even started the challenge, I did this for 3 months, just kind of practicing, honing what I was exactly going to do when I scaled it up before I borrowed money. And then once I proved it to myself for 3 months that I can make money and do it, then I started scaling up. And if you look at the history in here, I started small actually, and then ramped it up. I started with a $75,000 deposit, and then I ramped it on up to about a $95,000 deposit. And I'm sitting on $25,000 profit right now on top of all that. So I'm sitting right around $115,000 in the account. And, it's just grinding along. And I'm actually at the all time high profit. I haven't really taken a step back at all, even though I'm sitting on a couple that are losers, like Chipotle is down, but overall, the account's still positive, net positive. So,
Yeah. It's fantastic what you're doing because I believe the most valuable skill in the world is knowing how to generate cash flow from the stock market. And
yeah,
once
see,
you,
this
you're
one's sucking. I mean, no sugarcoating this. My cost basis is up here at 49.
now, why did you get into this one?
Same kind of pattern that was on DocU. It just this one took a bigger step back on me. I thought this was the bottom. Like I was pretty confident. And when we broke above my technical indicator, I thought we were game on to going higher again. That was 3 waves down. That's Elliott wave wise, a correction potentially complete. I was looking for this to expand higher quickly. Well, we took a big down and we've continued down a little bit. And I'm sitting here with, I have 49 strike calls sold out to next earnings on out here in November. I'm just going to sit on it for a while, see what happens. I've been selling calls against it. I'm not sweating it. It's not like one of my followers was like, "Oh my gosh, should we just close it out and take the loss?" I'm like, "No, I'm just gonna sit on it and work it back out to positive. If we get down here to the 30s, I'm gonna sell more puts and dollar cost average down."
It's really hard to lose on this strategy. I've got a service called the Cash Generation Blueprint that we've been using on Google, just covered calls on Google. But we started 3 years ago. And we started when Google split, it was 2,700 or whatever, and it split. When it split, it was $116, and that's where everybody started. If you didn't have the stock, we went long Google at 116, started selling calls against that 3 years ago. It went all the way down to 88 on us, and nobody lost money because we kept selling covered calls the whole time. And the only time you would ever need to buy back the call that you sold is if it's at a strike that's below your cost basis. In which case, if the stock got up there and you didn't want to get called out, you'd buy that call back, take a loss, sell another call 30, 46 days out at 10% higher than where the market's at. So you can sell calls even at strikes below your cost as long as you don't get called out at that price. You can just continue to do this until the thing turns around. And if it never turns around, you can just still do it forever.
And speaking of selling calls below the basis, I actually did sell some 44s for next week on CMG here. I've got them sold right here, right just right above, very short term.
Yeah,
And I don't really expect it to get up there by next week. But if we do, I'll probably buy them back and roll them on up
yeah.
and roll them on up.
Very, very, very hard to lose. Might even say impossible to lose if you do this the way you're doing it there. And I'll tell you something that's funny too, as you go through this with Chipotle, anything you've got long term, you can get your cost basis down on the stock to where it's ridiculous. For
Oh,
example,
that's,
well, he
I
did
was
it
going
on
to say,
so
I
many,
did it on,
he got his
yeah, I did it
cost.
on Red Hat way back when, before IBM bought it out. I actually had a negative $20 cost basis on that stock. So that's, it just takes time. You can just sit here and work it.
Yep. Hal Fuller asks me, yeah, when you got two trades, do you keep the old one? Yes, I do. I just let them expire worthless, Hal, and pick up as many as you want. But I always, with the credit spread, I always go for 100% expire worthless.
And
So yeah, back to the covered calls, on Red Hat, on any of them, if you just stay stubborn, right, and follow a system
yeah,
where the only time you'd buy back the call, if it's at a strike you don't want to get called out at and the stock's got to that price. Other than that, you could do it for 20 years on the same stock.
and that's essentially, I got into Red Hat on the back of the .com bust, and it was 2018 or 19 when IBM bought Red Hat out, and that whole time I went from $3 a share. In I guess some counts I had $3 a share, some accounts I had $5 a share, and IBM bought it for $190 a share. Sold
Wow.
calls the whole way along the way, and turned a $500 account into a $26,000 account at the end.
Way to go.
So
Well, that's a lot of persistence, a lot of stubborn persistence. Most people would have thrown in the towel, but not you. And no, I mean, that's what it takes. You gotta have some mental toughness to trade. You can't be weak about it. You got to be tough. So that was great. You didn't get shaken out of the stock. A lot of people would have. And then
I mean, it took ups and downs. I mean, there were some mega ups and mega downs in that, almost 20 years right there, 15, 16, 17 years. I mean, there were some big swings, and I'd pull it up sometimes and be like, well, that sucks. I'll just go out, you know, 3 months and sell a call. Just wait for it. And, I had confidence in the technology and the company that it was going to do big things. And IBM thought so too and bought it for $190 a share. So
I, I just bought some more IBM yesterday.
yeah, IBM's looking like it's, set on my technical pattern here. We actually kicked it off. If we can gap fill it here.
All these
If we,
gaps have been filled in though in the past. Look at to your left, that gap
yeah,
down filled in, and then another gap
left a gap
filled in.
up right there.
So just know when you're looking at a stock that has gaps, some point in the future that gap is going to get filled in.
When and if we can get above that gap down we did, highly likely we're going to expand on out to 306 to 315 area
I
right
like it.
there.
I'm going to start selling calls on that today.
So that's a
Rob Broyero asked any thoughts on how to pick a good strike on a covered call. I like when we did the hardcore math on it, it worked out to be 7.3% to 10% higher than the market is. And if you get called out at that, that's not bad. If you get called out 10% higher than where you get in and you keep the premium as well. Now, some stocks, though, you might want to go a little higher than 10% and some a little lower. It all depends on what their beta is and what their trend is. For example, like with ticker symbol O, Realty Income Corp, that thing is just flat, right? It doesn't have any juice, any volatility. So when you pick an option to sell on that, you got to go out like 6, 9 months a year. If you get a really good covered call stock, then you could do that every week or once a month. And then if you're doing it on a weekly basis, you wouldn't necessarily go 10% higher. That'd be a huge move in a week. But I like,
So I was gonna say I was gonna throw in my 2 cents here too. I like to go for that 30 to 40% annualized income. I kind of stay right there where you look at the cost here and the money you've got tied up in docu. For example, docu here, because that's the one we started out on. If you go in here and you look at the weekly amount of money you can get here, you divide that by the number of days left, and we've got Wednesday, Thursday, Friday. So 24 divided by 3, 4, however you want to look at it, 4, and it's $6 a day on the 8,600 bucks, 8,600. And, that's at the current price. My actual cost basis is down at 78. So I could use that 78. And then you multiply that out by 365, that gets you the per day return, 365. And I like to shoot for around 30 to 40%. Now that's not always attainable, especially when they're beat down. But if it's trading right at the money, that's kind of where I go. I like to keep generating that 30 to 40% a year on my cash.
now Pink Sparkles asks, were you saying to sell docu? I don't think you were, but let's tell Pink Sparkles.
So once upon a time, back we were looking at this a few minutes ago in the show. Speaking of a few minutes ago in the show, if you're brand new here, let us know in the chat right now that you're brand new, the first time viewer of this show, so we can catch you up. But right back here, July 11th, I sold a naked put, which is it was a cash secured put on July 3rd and collected 76 cents a share. Hey, look at all those new people, Jack.
Yes, very nice. Kim, Mr. Clemens,
So,
Spider Monkey. That's my granddaughter's
so back
recipe.
here, I thought July 3rd, I was like, I'll sell. I'd be willing to buy Docu at 78 bucks. And I'm willing to get paid 76 bucks a share, or 76 bucks per 100 shares, 76 cents a share to do that.
So basically, folks, he's making a promise. He's getting paid to make a promise, which I think is one of the best business propositions in the world. So he's putting in a conditional order. He gets to pick the strike, he gets to pick the expiration and pick how much he gets. It's a conditional order where he's saying, I promise to buy this stock at this price. If it hits that price, and you can pay me now a premium for taking on that obligation.
I got
That's
paid 228 bucks right there on July 3rd
getting
for
paid
taking
to make
on
a promise. Yeah, I love it. On a
took on
condition.
that obligation to spend 7,800 bucks essentially per contract times 3 contracts. So, roughly $22,000 I was committing to this trade right here. And I was getting paid 228 bucks to take on this promise to buy Docu for $22,000. 300 shares. Now, I got put those shares. And that happened on Friday, July 11th, right there. I turned around and started selling calls. I sold calls and sold calls and sold calls and sold calls. We come on up here, sold more calls. I actually took a loss because I rolled those into those calls so that the profit from this one's in this one too. And then I sold more right there on earnings. There was a drop and I sold more.
Are
I
you
could close them out and reopen them.
keeping track of your cost basis every time you sell a call?
I do. And then I sold more calls and closed them and rolled them forward, rolled them up and out for more credit. So this cost, this negative is rolled into this negative, which I rolled it again. So I've rolled this one out to go higher again. And that's, I'm keeping it going. And I've got 1,300 and whatever it was, 1,350 in closed booked profits, including these losses that are on here. And then I've got the gain in the shares going from 78 to the current price of 86. We can see right here, but I've got a commitment to sell at 84. Some people look at that as a negative. I look at it as I'm guaranteed profit right now if we stay above 84. I've locked in all of that profit plus all the credit I took in to sell that commitment to sell at 84. I might be able to roll it up next week. We'll see.
Now,
But I'm not worried about this.
how do you keep track of your cost? Do you use Quicken?
I have a piece of software that I bought that specializes in wheel trades, and I'm not endorsing other people's third-party software. It was very expensive, but it helps me when I talk about that 40% ROI thing. I just click a button and it shows me the options that are 40% ROI. It shows
Nice.
me the ones that are 30% ROI. And this is somebody else's third-party tool. Like I said, I'm not going to endorse other uh, people's stuff here. I may build a tool similar, but it also when you sell that option for 40%, you just click a button and it puts it right into the log, and it's kind of a spreadsheet thing, but it runs on the web, and it's handy dandy. If I can work a deal with those people, I'll I'll tell people what it is. But it was very expensive, actually. It wasn't cheap, but I've already paid for it many times over.
You
So
should write your own.
yeah, I should. Um, it's pretty fancy stuff though. It gives you a chart and draws your cost basis on the chart and everything. It uses a trading view plugin, and it's pretty fancy stuff.
I use a thing called a paper and a pen.
Hey, that works too. That works too.
It's not easy, Carol, but it works. Yeah. And I put notes in my trades and stuff like that. So yeah, I'm just a paper and pen dude.
Yeah, let's see if I can find one that I
I don't
put
know.
into my 50K challenge. Yeah, here. Let me pull this up, pop it out. I'll show you what it looks like so that you can just get a feel for it, like what I'm talking about. That it logs it all for me. It actually keeps track of. Let's zoom it out here. This is IBIT right here. All my trades, starting with my put July 25th up here, sold a 64.50, sold 4 of them. I got executed on 1, and 3 of them went out for 3 of them expired. So bought stock, bought 100, 3 expired, and then I turned around and sold calls, got 38 cents, closed it for a penny. Then I sold a put to lower my cost basis, 59. That went out for a penny. And this is how I keep track of it right here.
Dennis asks, where did you start selling naked puts on Docu?
Where?
Yeah.
Let's see. We can go back to the history. There's July 11th, and I don't remember. Yeah, there was one before that right there.
June 27th. Yeah.
And then let's see if I had any more before that. I don't like, yeah, there's more before that. So June 13th. And keep loading. May 23rd. I've been selling on Docu for a long time.
May. Okay, there you go, Dennis.
It looks like May was probably the first one. Yeah. So
All
I've been
right.
selling since May. Sold May, June, and July until I got put the shares.
Let's take a look at the options on DLTR. Rob says
Yeah.
I don't see any 10% strikes.
Well, I mean, it's down right now, so the premiums on the calls is going to be kind of weak. Usually, you want to sell on an up day, not sell on a down day.
Yeah.
You're going to sell
But if
upside
we were
calls.
looking at the strikes, what would you about a 103? Anything in there like that?
Let's see what we got. So right now it's at 94, right? 10% upside is $9 up. And to go $9 up, 103, 104, you're going to have to go out in time to be able to get money. So like if you're just trying to do the week, there's probably not a lot of premium up that high.
No, you'd have to stretch that out to the October 31.
And you're going to have to go out, probably at least the October expiration. And now we're starting to see up around 103, you got $1. 102, $1.15. It,
It's tough.
I know Rob got put at $1 or got put at 100. There's $1.54 right there. If you wanted to go and make, $1 on the shares plus collect premium, $1.30 right there.
Great trade right there to 101. Fat. All right.
You know that
How about a naked put on IONQ for the good Nancy Boyer?
first off, it's at all-time highs. Usually selling puts is good on down days, not on up days. Selling calls is great on up days, not so
Right.
good on down days. So this
But this
is,
one,
first off
this
mindset thing.
with an all-time high, there's a lack of overhead supply. So this would be decent for a naked put. Let's see what the options change showing us.
One thing about it, Jack, you always talk about this. That's a lot
Oh,
of loft.
big loft here.
So that's opportunity to come back and retest this breakout right here at a minimum. So for me, I'd probably want to be around that breakout price
Mhm.
because that's where we might pull back to. That's kind of a logical pullback, psychological test place. So just look at the chart. That's kind of what I would think
Hmm.
before I even pull up an option chain.
Right.
I don't know if you have anything different, Jack, that you would look at, but
No, that's how I do it too. When it's credit spreads and naked puts, this is a little bit too lofty, but I always go back to that moving average. Whatever you use for support, I want to be there or slightly below that, depending upon if it's a credit spread further out. If it's a naked put, maybe not that far down out of the money. I like them close. I like naked puts kind of close. You get a lot more, and if the thing is already trending, it's going to trend away from your strike. But if you were
40.
going to do the 49, what would he get paid here? Or
Yeah, so
Nancy?
we were talking about 49, so let's jump out here. Yeah, we could go out to Halloween.
Yeah.
That's Jack likes to give a little time. And 49, paying about it's a big wide spread, so obviously not very much volume going through down here. We got one on the volume today. Looks like you could get about $1.50. I mean, that's pretty.
Yeah, that's not bad.
$1.50 on 49. I mean, that's what, 3% for going out a month. Annualize that. That's times 12. That's 36% annualized. That's pretty fat.
Dennis, I did NVIDIA for my credit spreads this week.
Now, if you catch this on a down day, like if IONQ drops down to 49 and you decided to sell that put, you're going to get a lot more premium in here, a lot more juice than you would today on a big up day.
Bodine, Bodine, you got to do a like a stand-up comedy routine in your town and record that, and send it back to me. Bodine says back when we had here in the 80s, hairstyles had a lot of loft.
Yeah, some of them still do.
Yeah, you should, Bodine. Go to your local bar, tell them you want to do a stand-up routine. Have somebody film it and send it in to us. I think you're the next Richard Pryor.
Yeah, there's no loft on either Jack or myself here today.
Oh man, that's beautiful. A lot of loft there. You got to watch that.
All right. What else we got? What else we got? You wanted to talk crypto when you came in here.
Yeah, I wanted to talk crypto. I don't know why this is, but it seems like everybody's talking about, crypto having a big washout, and it just is not happening.
Oh my gosh, we pulled back, Jack. I mean, we came up to that resistance at 118 I talked about, and then we pulled back. It was a 5% pullback. Oh my gosh, hair on fire. We don't get 5% pullbacks in this market. Look at the S&P. We haven't had any pullback at all since
Dow hit
Liberation Day.
Dow hit another 52-week high yesterday. Just this thing just keeps on chugging. But I don't know. Do you see a Bitcoin breakdown or a Bitcoin breakout?
Here's the warning level for me. We hold this zone right here.
112?
It's set to go higher. Yeah, I basically have my alert at 111. If we get below 111, I'm a little concerned that we might dip down in here, the low 100s. Now, if we get below 100, things might change. My opinion can change. All right. I reserve the right to change my opinion. But as long as we're staying above this 111, I'm still looking for my all time highs. I've been talking about these levels for 4 years,
Quietly,
150.
without reason, it goes up, right?
I mean, there's no reasons for Bitcoin except somebody's willing to pay more for it. What's funny is the last few days we've had almost a $500 million worth of Bitcoin accumulated by all sorts of top holder. IBIT and BlackRock. Um, Michael Saylor bought more. He bought 100 million. And BlackRock bought 300 million. Somebody else bought another 200 million. I mean, we're well over $500 million worth of Bitcoin on this drop right here. And they're buying more supply than is being produced. To me, the psychology here is just it's going to pop. It's just we've got to wash out people, just frustrate the market's really good at this. It's got to
Yes,
frustrate as many people as it possibly can, shake them out of their long positions,
we
and
can.
then once that all happens, it's going to shoot up again.
And once everybody's out that wants out, they're gonna get out. And then what they're gonna do is they're gonna get right back in when it goes above 115. Right in
Once,
there. You're gonna be
yeah,
like,
once it starts back up at that 120, people are going to jump back in, and then it's going to go parabolic up here. My
yeah,
target's sitting between 150 and 170.
yeah. And the
That
thing,
area.
like you mentioned several times, Jeffrey, is when a stock moves up like that red arrow, it draws in more buying when it should draw in more selling. You want to sell into,
Yeah,
but
selling is strength, but
irony is that it brings in more buying.
everybody starts bragging about how much money they made. And humans, we are all humans. We love to be a part of that big gain, and it kills us to not have a piece of that big gain. And it sucks in everybody that didn't get a piece of it. I've got to be in that too. It's gonna go higher. I know it's going higher. Like everybody's excited. Everybody's making so much money. I'm missing out. Fear of missing out. That's what we call it. FOMO.
And we
Mm.
got we got the other side that I coined the term FOGO, fear of getting in, right?
Yeah, some people are scared to death to buy here right now. Um, I sold a put here yesterday. I don't know about you. I mean, Jack, you told me yesterday you had sold a put
Yeah,
before.
not on Bitcoin, but I'm doing it on IBIT.
Yeah, on the proxy IBIT. We don't have options on Bitcoin, but we do on this, and this very well could dip a little further. We talked about support levels on IONQ there a minute ago. This could dip on down. But right now we have the same exact price pattern going. It just, a little more gappy here. We have that high we made up here. We have this low back here. We have this support, the 618 right here. I kind of want to see it hold that area. I sold a 6250. I know you were, and that's just out to this Friday. Like 3 more days I've got on that one. I know you're out to 59, I think it was, out to Halloween.
Yeah, 60, 63 and some 59s. I think I just got to 59 now.
Yeah, you were saying that yeah, I think you were at
I took in
6250 last week that expired and then jumping out to Halloween down to 59. I mean, that's not bad right there.
nope,
20.
not a bad sandwich.
But actually, if you look at it cost wise, the that IONQ with the 49 was actually paying better than this one right here at 59. It's kind of funny. Opportunity abound.
Mhm.
But I went out just to this Friday. I did this yesterday. I sold the 6250 right here, collecting my 40% annualized ROI.
Bodine sold his IBIT at 66.81 and just bought a little bit. He's nibbling back in.
And so I like to just sell puts, and if I get put, great. If I don't, that's great too. I just keep collecting the cash without having to buy the shares and recycle them, or
When you get the stock gifted to you, you can sell calls, right almost a little bit above where you had it put and bring in a ton of cash.
I was put, that thing I had up a minute ago. I was put at 64.50
There's a
several
little
weeks ago.
ruckus outside here. Hold on 1 second.
All right. But I was put 64.50. I had that up a few minutes ago. I've been selling upside calls and more puts because I only got put 100 shares out of the 400 I was willing to buy. And I keep, people are like, well, why aren't you selling three puts? Well, I just want to take a little nibble and a little nibble. If this drops a little more, if I just sell one more here at 62.50, then I've got 200 shares with a cost basis halfway between 62 and 64. So 60, right in there in the middle, 63.50. And then if it drops further, I can sell another one down here, lower my cost basis again, dollar cost average. And I'm making pretty fair money just selling these every week. Pretty fair money. You wonder, well, how are you doing on it? You can see it. It's right up in, it's on the list here. There's the one I sold last week. Got 72 cents for selling a 64.50. And I didn't get put it. And then now we're sitting here, I bit hanging out right here at 64. Just keep bringing in money, and I don't even have to take those shares. So doing this is an interesting way to keep making money, and it seems scary at first. Oh my gosh, I might get put shares and they might be underwater, like my 64.50. But really, my cost basis is actually down here in the 50s at this point because I've sold upside calls and I've sold more puts against it. Never gotten put shares, so my real cost in the 100 shares that I have right now, with all the profits I've already booked on this, down here in the 50s. So, yeah, I mean, you could sell there's all sorts of things you can do. You know, I I like to collect premium and just, you know, rotate in and out. Um, for the first several months, I didn't get put any shares at all. I just kept collecting put premium over and over and over. And Warren Buffett famously did this on Coca-Cola it took him like several years before he got put shares on Coca-Cola. But
He
he was
got his
selling,
cost, he got his cost down to $3.49.
yeah. So
That's why he's selling calls against it, and the profit is just insane.
absolute insanity.
Yeah.
This is just one of those things that can sit there and work in the background while you're doing other trades. I still do other trades and things. It's just I don't do them that much in this account right here. Why don't you do all the other stuff? Because this is the account I've dedicated to doing this kind of strategy and a couple of my other more the higher confidence trades because I'm trying to build this into a cash generating machine right here, an income generating machine. So you do income kind of trades in an income generating account.
Carol's doing great. She says, I sell stock as it goes up prior to X date. I pay myself the dividend early, rebuy the stock when it dips.
Yeah.
That's beautiful. And she says, my cost is zero on MSTY, and I just collect the monthly dividend. Way to go, girl.
Yeah, yeah, it's good if you can get something like MSTY to a zero cost basis. That's great because this is probably eventually going to zero on these yield max.
Yeah, it's probably going to go out of business. Kim wants to know if K Info is your broker or just your reporting platform.
That's just a reporter. Like this is a independent verifying platform. I'm actually trading at Robinhood. It's, you can link accounts at tons of brokers and stuff like that. I do pay monthly to be able to show everybody the trades and, access the stats and all that stuff. So,
How do you like Robinhood? Any downsides?
so the downsides, I'm not a big fan of the phone app. They recently released a desktop app that's that they're improving almost like they push out alert new updates almost twice a week. So it keeps doing more and more stuff. And I like the desktop platform. Not a big fan of the phone app. But the thing that really got me there is the fact I've actually pushed almost 400 contracts in 5 months of doing this right here, or 4 months of doing this, and almost 400 contracts, and they charge me no contract fee to trade. So to me, no commissions is like that's a bigger plus than any frustration I might have using the platform.
Thought about it. What's their margin rate?
Have a four. Hold on, hold on. I'll tell you, it's scaled depending on how many millions of dollars you got. I don't even meet the first tier, but
That's how Schwab goes. It's my rate's about 10.
let me see. Margin rate. I have to click the right button here. One of these
Hasty
things.
Trade is awesome, Kim.
I love Tasty Trade. I actually placed the most number of trades at Tasty Trade. I had the most amount of money at E-Trade between my parents and my wife's and I retirement account. And let's see if it'll tell me the margin rates.
I use Schwab and JP Morgan. I do not recommend you use JP Morgan. I opened an account there. Friend kind of pressured me, a higher up guy in JP Morgan, and that platform is terrible. Um, maybe
So
if
yeah,
you're just buying and selling stocks, but it's not designed. The guys that are going to take the game over are Tasty Trade, uh, Robinhood, right?
yeah. I mean,
Or
so my
CK.
yearly my current interest rate for margin is 5.5%, and they pay me 4% on cash balance
That's great.
at Robinhood. And that's my current rates with my account balance.
Tasty Trade really is great, Kim, because they are options specialists. That whole thing is really set up for options, and it's great, great, great platform for that. Absolutely great. Kind of designed for option traders. So if you like options, Tasty Trade is awesome. Thinkorswim.
So I was gonna say that the guy that created Thinkorswim, Tom Sosnoff, he sold that out to TD, Ameritrade and TD Ameritrade, and now it's become Schwab. He had a non-compete for several years, and then once his non-compete was up, he got together some buddies and created Tasty Trade and built that platform. And he fixed all the little quirks that he didn't like in Thinkorswim when he built Tasty Trade. And he just designed it for traders. You can get access to everything. You can trade crypto, futures, options, stocks, all in the same interface, all on the same platform. And they, instead of having all these like levels and stuff like that, you just apply for the works. And I have not had a single person not get the works. Um,
Get the
they just
works. And they understand the trades too. I don't really think they would buy you in on a credit spread that's kind of going upside down. They'd leave you to take action on that. Or a lot of firms might step in and do something on your behalf in a credit spread, and it's not a good move. But Tasty Trade knows what's going on in the options world. Everybody that works there knows about options. It's a good thing.
Yeah, I like I said, I probably placed the most number of trades at Tasty Trade, even though I push a lot of options at Robinhood, and I have the most amount of money that I manage at E Trade with Morgan Stanley. They've Morgan Stanley's now bought out E Trade, so
Interesting.
that's I have an account at Interactive Brokers. I have an account at yeah, gosh, I can't. I've got accounts all over the place because one, no one hack's gonna take all my money, and two, I can help people like you trade wherever you're trading. Fidelity is the only big one I don't really have an account at,
I
and
what's great about Fidelity is you can have that health savings account there where you can't do that at Schwab, and a lot of these places are just not set up to have an HSA account. but I have two of them at Fidelity. I trade like a madman in those things. I take as much risk as I can because it's just, it's my total spec account. I don't really need the health savings money, but I like protecting it in there and trading like crazy in that thing. And Fidelity's been great for that.
Yeah, and Fidelity has some other features, like they do a sweep on your uninvested money, and they sweep it into a high interest paying account, money market type thing. And while others do offer money market, they don't pay nearly the rate that Fidelity pays. So there's some advantages. The platform maybe not as user friendly, from what I understand, especially if you're a more active trader, but to each their own. To me, all the platforms work a lot the same. It's just that this button over here might be blue or orange or green, and this one's, they're called something different, but they all work about the same. They all do the same kind of trades. So,
Depends on how you like to look at it. Sometimes think or swim, it's got too many bells and whistles for me. Tasty Trade totally does. I don't need all that. I don't need all the bells and whistles. I already know what I want to do. But if you don't know what you want to do, those bells and whistles can maybe help point you in the right direction. But a lot of it is overkill for me.
yeah.
Straight up
And
stop. I'm fine with that.
some people get distracted by bells and whistles and shiny objects, and go down rabbit holes and lose track of what we're actually doing. Just trying to be consistent and make consistent money, do the same things over and over and over.
I don't know who
So
was it, Roger or somebody had that chart they showed us of the customer used the chart and he had so many indicators on there. You couldn't even see where the stock price was, right? I mean, I don't, did you ever see that one? It was actually using it. I mean, it was unreal how much stuff he had on the chart. Just everything you could have. You couldn't even tell what was happening.
I have people that come to me like that all the time, and I used to put a bunch of more stuff on here, and I've just simplified down personally. Some yeah, I can turn on all sorts of things that I occasionally turn on and check. This highlights highs and lows. I used to have trouble picking out which ones were important. After using it for a little while, now I can pick it out pretty easily, and I don't have to have that turned on. So it's, you know.
Yeah.
Anyway, as I simplify down more and more,
You had a question about Ether. Somebody was asking to take a look at Ether.
I've got 33 strikes sold.
You go. Who asked about Ether? I don't remember, but I want to answer all the questions you guys ask, so I don't want to leave any question in there.
I've been selling
Easy to
33
manage,
strike.
tasty. Ether looking good. Ether's got that trend. Ether's got that low price. Naked put on this one cost you $3,160 or 20% of that on margin. I mean, I love the price. I love the trend. What's the beta on this little puppy?
Yeah, so the beta doesn't show properly because it's only been around for a few months, but it's running 1.26 right now.
That's
I think
okay.
it's probably closer to 3, honestly, once it gets enough data.
But I love the price because you have a very low capital commitment to do a naked put.
Even out to this Friday, you can go down to 30 and do 20 cents right there, which is just wild return.
It is.
If you went more with Jack's Halloween, you could you get $1 all the way down into 27. Just wild money, wild money.
This is Trading View, Kim.
Yeah, I chart on this platform because everything I draw right here is shows up on my cell phone. If I load the TradingView app on my cell phone, if I step away, it shows up on every other computer. I have TradingView logged in. I trade all over the place. I work, this right here is not where I trade. I come on here and do shows, and then I go sit at my desk and have a monitor there where I actually trade. So I pop up the chart there, and then when I go home, it's everything I drew while I'm sitting here talking is on my laptop. And when people ask me questions, I just pop up my laptop. Oh, that's what I said. Here's the chart. And so I love trading view for that reason, because whatever I draw is just automatically saved and synced across everywhere I have, every computer, every device that I have logged into my trading view account.
I'm starting to like it
And
more than bar chart.
yeah, I've never used bar chart really for anything. And you know, other awesome things is you can build your own indicators and alert systems and things like that. When Jack took a couple days to go motorcycle riding, I did I did a couple classes here in Market Masters and showed off how to build your own indicator and backtest ideas. And if you missed that, which if this is your first time viewing, you might want to go check out our replays of Market Masters.
That was gold, man. That was pure gold. I love that. Now, Christina is asking the question, are you just selling puts? But that's the start of the wheel, Christina, is the very first move you make is sell a naked put, either cash secured or on margin, but it's naked on a stock. And then if you don't get the stock, you do it again at expiration. If you do get the stock, you turn around and start selling covered calls on it. So he's just selling naked puts to start off the wheel. Is that
Let
right?
me, yeah, let me, I can screenshot something here, and somebody may want to take a screenshot of this when I pop it up. I'm going to show you. This is kind of an outline of how this works for everybody right here. I wrote this out for my VIP people.
Cool.
The wheel's quite easy here. Step one, you have to want to buy, you have to want to own the shares of this stock. All right. So you sell a put on a stock, you want to own shares. Step one. Now, step two, we have a couple different things that might happen. You can either close the put or you can let it expire worthless at a profit and go back to step one. Now, step 2B, you don't close the put. And if it's in the money, you can take assignment. All right. Then you have the shares. Then you move on to step three. Now, step three has a couple different options. You can sell shares at or above the strike price that you are put the shares. So when you sell that put to begin with, you're picking a price. Now, to stay in profit, you want to sell those shares at or above the strike price you were put. And you can go back to step one. Like, you don't have to do anything else. You don't have to sell calls. You don't have to do anything else. You can just sell those shares at or above in profit and go back to step one. Now, step 3B, you can sell a call at or above the strike price or your cost basis of the trade and keep working your way to more and more profit right there. When you sell a call, you're taking on the obligation to sell your shares at that price. When you sell the put, you're taking on the obligation to buy the shares at that price. Now, step 4A, you can close the call at a profit or you can let it expire worthless. And then you go back and repeat step 3B. You just keep doing that and that, do that over and over. And then step 4B, the other option is to let the shares get called away, which is what I might do on DocuSign. And then you come back and you go back to step one, all the way back up here, step one again. And people have lots of opinions on the right way to do this. I have a personal way that I kind of tie it with my technical analysis bullish pattern, and I call it the turbo wheel. And Jack has his own like little things, like he likes to go out a month. I tend to like to go out a week or 2 weeks on my options and recycle faster. Jack likes to get paid monthly, collect a little higher premium each time, but less worrying about it in between. So there's lots of right ways to do it. Really, any way you make money doing it is the right way. And any way that fits with you and your trading style is the right way. Any comments, Jack?
That's exactly right. I love that. That's exactly how I do it right there. But I like the monthlies. I want to get paid 11 to 12 times a year. All my bills come in monthly, so I got mine set up monthly.
There you go, everybody.
That's
There
beautiful.
you
The
go.
wheel is the money makingest thing out there. Carol asks, when the stock pays a dividend and you sell puts, do you have to pay the dividend? Nope. And if you own a call on a dividend paying stock, you don't get paid the dividend either. But you don't owe the dividend when you have a naked put.
Yeah, there's only like these really weird, quirky things where you get executed during the dividend payment that can sometimes catch you, but I've not the instances where I've ever had that be a problem are very, very rare, very rare. So, anybody have other questions here?
I think we gotta, I think we gotta show them something new.
Well, Jack, since we have a bunch of new people here, we're gonna replay the presentation we did yesterday on how to actually make some money off of Bitcoin without actually worrying about
And that was the
selling.
coolest thing I ever saw yesterday. Honest to God, I couldn't stop watching it. I didn't know you were going to do that, and I didn't really even know you had that out there. But dang, man, talk about a guy that has cracked the code. You want to see a guy who's cracked the code hard? You cracked it hard. You cracked it like an egg. This thing is unreal what you're doing with Bitcoin. I'm so impressed.
So there's a cycle that happens in Bitcoin every month, and whether you realize it or not, there's these rips that happen, and they happen almost every month. And it happens to kind of coincide around when the bills are due. Jack likes to do that monthly premium. Well, it turns out a lot of the crypto miners do too. And they create this cycle in Bitcoin's price. And I've kind of tapped into a way to take advantage of it. And Jared's going to replay the presentation I did yesterday here for you and go through it
Craziest
all.
thing I've ever seen. It really is. I don't know how you came up with that. That brilliant is all I could say that this is. Hey,
It's not a thing where I'm going to teach you how to fish. I'm going to load up the bait, load up the rod and reels, and I'm going to take you fishing with me and
spoon feed
get you
them.
hooked up.
Spoon feed them the cream of the crop, baby.
So if you
Yeah.
want to see that, we're gonna play that right now for you, Jared. If you got that hooked up, let's
Hold
go
it.
with it.